Welcome everyone to the Kendall Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. This is a special live. Markets are melting down. I wanted to come up and just cover a number of things. We're going to go through individual stocks. I'm going to field questions from you folks. We'll go for a while. We'll see what happens here. So let's go ahead and get into today's video. All right, folks, what a day. What a way to start off September, to say the least. I guess there's a crazy world we're living in for sure. So markets are printing almost to their lows right now. Let me put up a screen. Let's split screen this thing real quick here. So here's the plan for this video. Just going to talk a little bit about what is going on and what the what my perception of what's going on here is and where we are in the market cycle. And we'll actually go through and we're going to look at all these stocks that are getting hammered. The NVIDIAs, go through a bunch of stocks and focus on a lot of stuff. And yeah, let's get into it. Let me go to this other screen here. I've got TradeStation up here. Just been doing some trading, but I had a really good day so far today. So looking at some crazy markets, down 109, down 1.93. Let's come over and let's I've got NVIDIA up here, but let's go to ES here, and we're just going to start off kind of randomly. This is the weekly chart that I've got up here right now, and it's interesting because I tell you folks, those of you that get the Substack, you'll know that the I was talking about coming down to, let me go to a daily chart here real quick. I was talking about the markets declining into that 21 and 40 day moving average. I tell you this, every time I mention a number, it usually goes there the next day. This was not my expectation, but here we are. The 40 period moving average is, right now it is 55.37. The low so far today, 55.51. So we're almost down to that level. And we also have an outside reversal going right now. So let me blow this up so we can see this a little bit bigger. So you can see the big outside reversal. We've got something else going on here, which is the not only outside reversal down, but we're also potentially going to get an STX buy signal, which means we're likely to be stable. I think it's kind of interesting because markets seem to be wanting to react. And I was talking about last night in the Substack. Let's just start to unpack this thing from this level. But what I was talking about is we were just a stone's throw away from printing. And matter of fact, overnight, the market printed up pretty decent. It actually made the same high as we made on Friday. And on Thursday, we've been printing up at that high 56. Let me get the number here, 56.68. It's too far away from my old eyes to pull up here. But the bottom line is, let me do one thing here real quick. Trying to get this this screen centered a little better. Bear with me while I fix this. Okay, so I got it just a little better here so that we can see what's going on. But basically, what's happening here is we've got this big reversal. You can see the algos are starting to forecast down. I still think there's enough upward slope on the 21 to catch this thing, and we'll break this down here real quick from the standpoint of what's happening. So I talk about this all the time. I know it's a broken record. I talk about it on Substack. It seems like the subject that I always get into is that the markets get into these stampede modes. Everybody gets long, everybody gets short, and it's just amazing. I always quote my old friend Lou Horowitz. He used to be president of the old New York Futures Exchange. He used to always say, "The trend's your friend, never too low to sell and never too high to buy." And that has never been more true. And I call the new, we'll call it the new traders that are out there. There's a lot of millennial traders. They're the biggest group out there. They're getting back in the day when I was trading and head analyst, I was in my mid 30s, early 40s, and that's exactly where everybody's at. The changing of guards has happened from us old boomers and over to the millennial traders, but they have a little bit different techniques and things that happen, and therefore we see an expanded volatility that we haven't seen before, and we've got a lot more players than we've ever had in the markets. It used to be in the old days where we controlled all the information in the markets, so you only got to find out what we wanted you to find out, especially back in the 80s. But now everybody has transparency. We all have these magic charts and real-time metrics and all types of things on the screen. So we're seeing a lot more reaction to these volatility points. Now I'm kind of want to watch something here real quick. I'm going to pop up TradeStation because I'm looking for a pattern here that's going to signal low, and I'll probably put a trade on. We'll probably do a live trade here if it comes out. But here we are, new lows again. They're printing. You can see over right above my head here is the level 2. We just printed a new low down to 49.50. So there are no real numbers down here. We'll go through and look at some of the support numbers, trying to find any type of support. Now it's interesting because we're likely to see a day like today could get a flush on the WaveTech database. We've been staying really in the high 70s. It's been worrying me. It's really odd that this morning waking up, I was thinking, the markets were coming under pressure. I thought, man, we're getting awful close to a potential major top here. And I would tell you folks, if I know there's a lot of you probably have used a WaveTech software, it's never going to be needed more. This is somewhat of an advertisement, but it's you need a sell discipline. And I'll show you. We've been out of NVIDIA. I'll show you some of this stuff. The model sold out of NVIDIA a bit ago. So, but the bottom line is you're going to need a sell discipline. And things are starting to get really touch and go here from the standpoint of what I'm seeing happen with some of the metrics. Now we still have on a monthly basis. We'll bring up a couple longer term charts here, but I'm just kind of watching for a pattern. What I'm looking for here, those of you that used to come in my old live trading room, I'm looking for a formation on the 5-minute graph here that looks like a potential, what I call a whale belly. If you can see where my cursor is, let me bring this up full screen here. But you can see we get one of these little rounded bottoms here. That's basically what I'm looking at right now. Bear with me a second. I'm trying to get this thing back into the screen. There we go. The bottom line is that what we're looking at here is just we're not getting that formation, and I think there'll be a pretty decent bounce off of here. Maybe we can pull off a trade or two, but we're still printing down here at the lows. No formation here that looks like anything's going on. So I'm going to talk about a couple of charts here. Now this is on these same indicators I have here are also on TradingView, and they're actually probably, this just gives me a little better view and I can fire away if I see this thing bottoming here. We're printing at, we're one bid above the low. We're bid at the lows, 49 new lows, 49 even. So they're still punching them out. There is no bottom in sight here, down just about 2% at the moment. So no signs for a bottom. We could get close to that 40-day moving average. Let's go back over and come over here to, let's take a look here and try to get to a couple things here. Just trying to get oriented. This is a total impromptu live stream, so we're just coming up here. I want to see what the intraday algos are going to do here. Let's take a look. Let's go to hourly chart and see if there's any, looking for maybe a V bottom formation. We're actually getting close to a potential V. Where are we at on the hour right now? We are, yeah, we're perfect timing. We're about 4 minutes in, and the hour is going to turn over. So let's just see. I'm going to try to get this reduced a little bit, see if I can get both screens. I want to be able to see what's going on with the level 2 here. So here's the hourly chart. We're at the, if you look here, we're at the market grid. Those of you have the indicators, we're at the bottom of the market grid. You can see the hourly algos are suggesting that we could trade up just a little bit. I want to move over everything just so I can get lined up. So we have a trade coming up here in just a couple minutes. I've got like multiple monitors over, so 4 minutes until we get a close here. But we want to watch this pretty close because there's likely to be a reasonable bounce. And right now, we're trading right at the extreme at the moment. Let me just trying to get everything situated. Still trading at the lows of the session. So let's just stay here for a few minutes. We'll watch the market and hang out. And then what we'll ultimately do, we'll start going through a whole bunch of stocks. I'm going to ask you guys, don't give me anything yet. But we'll go through a bunch of stocks. I figured there's going to be a lot of folks out there that want to go through stocks, new lows again. So as we're coming into this hour, we're printing at the lows, 46.50 now, low on the futures, bounced a little bit here. I've talked about this. It's been a long time since we did a live stream like this. I'm flashing back in pandemic days, and this is one of those patterns on the level 2. You'll print a new low and you get a 200 to 300 point bounce, and then it'll go down and make another new low. And what you watch for if you have this capability is if you print 500 off a low, that would be 5150 would be that number. That usually tells you got a low in the pattern, and we should see something set up here. So right now we are still about 2.5 minutes to the close here. Yeah, 232. And so we're right there where we're going to see this thing possibly turn around. Everything's kind of turning around here. I'm actually putting a small position on here. I'm feeling it. We'll see if. Order filled. All right, so yeah, we're coming right in here. We're almost at a STX buy signal. A little risky to do this, but I've had a fairly big day, so I've got money to spend, if you know what I mean. So, but we should get a turnaround here. We've got a bit of a V bottom. We'll see. We're going to get the update here in about a minute and a half. So let's take a look at this. This would be awesome to get a nice turnaround here and see one of these V bottoms form. What we're looking for is ppm 2 to turn up, ppm 3 if we can get. We've already got a little mini V on ppm 1. We'll see what happens here. They're still pressing them, so I'm definitely ahead of the curve here. Yeah, we'll go through a whole bunch of stocks, folks. We'll have a good time today. I've got a little bit of time to spend with you guys. So we'll see what happens on the turn of the hour. It is coming in just a few seconds. Any second. We got a good chance of coming back towards this 10-period moving average here. Here we go. We got the turn. We're already green a little bit here. So we did get a turn up on the, you see here on, let's see if I can get this working. Hopefully I don't create a cluster here. Of course I did. Bear with me just a second, folks. I'm trying to get to, there's this drawing pin that is behind everything. Great. I'm still hating on the Mac. Okay. So we got a little bit of a turn down here. Just, yeah, so we're still negative. Really trying to make a turn here, but it's not really going very good. Let's come back up here. The forecast, so this will be interesting to watch. We're going to hang out for a little bit, but the forecast is for this continuing. See that the August, these dotted lines where it's shaded is the projection that the ppms are going to turn up here, which would suggest we're going to test the 10-period moving average right now. Let me get that number for you. That's 55. Man, I cannot read these numbers. They're too small. Hang on. Okay. Yeah, so 55.89. That's a big rally up to there. So we're trying to press the lows again here, right at 46.50, still the low. We're still kind of trading, consolidating a little bit here. The forecast for the close for the next hour is 55.67. That's a pretty big rally. That'll make some money if we can get that. Yeah, so somebody's asking, what do I think? We'll go through expectations for tomorrow. And, I just want to watch this pretty close because I've got a trade working, so bear with me a second. Looks like we're trying to go green again here. So the range that's being projected by the market grid right now is for a move to R1 55.68. That goes right to that band I was just talking about. And then 55. Let's see here. R1 55.52, 57.62. So that would be a decent little profit here if this thing would run up. So you can see we're turning green here. We're right at even. But the forecast is that we're going to set up a low here. We'll see if this comes in, and I'm glad we have some time. We'll just hang out and watch this thing unfold just a little bit. Yeah, good. I got a partner. We got another long going here. We'll see if we can get it done here. Yeah, here we go. We're starting to turn up a little bit. Let me see. Yeah, so I've got like 45 contracts on right now. So we'll just see if I'm going to scale out of here. I'm going to put some cells up here at 51, 50, 51. See if we can get a little blast. You can see over on far right hand side that there's some sell orders up here. It's grinding pretty hard. We're starting to get a little bit of that formation. So we'll see if we can get a little trade out of here. Here we go, green. Just got filled on one of the orders. So there we got another fill, another fill. Okay, awesome. Took all those out. Let me see what I got left. I've got 20 left here. So so that was a decent little trade, but I think there's more to this one. So we got a little cushion now. Typically what I'm doing when I'm, hey, Devender. Yeah, so typically what I like to do here is to take small profits on a larger position. And then now I've lowered my risk or put my risk at zero by doing that. So here we're trading up towards those 52 numbers that we have. So we'll just we'll do a trade here and just see if we can pull out, steal a few bucks here. So break even's about 55, 47, 50 right now. So even if it goes red, I'm still a little bit ahead of this trade. I took about half of it out. I think there's 25 left. Still got a little bid coming in here. Let's go to a little shorter term chart because I want to show you a couple of things while we're hanging. Let's go to 5-minute chart. So 5-minute chart is still got a forecast down. Yeah, this thing's struggling here. We're not really getting the bounce. They're just trying to become, but we're seeing some stabilization on the 5-minute chart. So we'll just watch this, but we're still in big downtrends here. So this is getting a little bit iffy. Like I said, you got the swarm out there. So they're trying to press the lows again. So that, glad I took, I'm about break even right here on this trade. So we'll come back up. Let's go back to the hourly graph. Yeah, but you can see short-term charts are still negative. And we got a slight positive trying to come out of the algos, but overall this thing is just pretty neutral. I'm actually going to, I just went with a kind of a scratch trade. I'm trying to sell 49.25s just to see if I can break even. And I actually bracketed this right now at 46, so a new low, I'm out because this is not a good sign. And that'll be a small loss if that happens. And we'll just see how this plays out here. Got to break even, trying to scratch the trade. Okay, I'm pulling those orders right now. I'm going with a stop under. I took off the scratch trade. It looks like we're trying to make a little mini turn here. Let's go back over here and look at the algos. Let's take a look at, let's go down to a 1 minute chart and just see what we've got there. Yeah, there's nothing here. This thing is just in a lot of trouble. Back into my scratch trade, so I'm just trying to scratch out again. A lot of times when I'm trading, I would rather exit out and then re-enter on another clean trade. Yeah, we'll hang out and do this trade for a few more minutes. Yeah, I actually nailed the short overnight. It was pretty incredible trade. This is a scalp trade, so. All right, I'm pulling those orders out again. Looks like we're going to try to push up through here. Back with a stop down below 46 and a quarter. That's a gotcha order. If you get it, I'll probably go right back in. So we've got some small Fibonacci targets here on a one minute graph. So we've got fib targets right now on the upside. So these are real-time indicators, recognize the patterns. We're looking at 50, 51, 53, 54 on a 1 minute chart. This fib target's up. So we're starting to try to print up again. Algos aren't very bullish by any means. But we could trade easily up to a 40-minute moving average here, which is right now at the 51 level. So in fact, I am just going to come up here and I'm going to put an order in. Hang on. Yeah, so I got 20 left. I'm putting an order in. We still have, I'm still bracketing this thing. I've got 20 at 51 if we hit these fib targets. Back to the 1 minute graph here. Algos are somewhat, here we go. So maybe they're going to print me out, take me out at 50. I got 51. We're 50 and a quarter. They're trying to print them. There's so many sellers out there. The good news, folks, is that the liquidity for a day like this right now is very strong. I've seen it where we lean out where there's only 10 or 12 on a side. So we got to 50.75 on that print, almost got to the number. But if you look at the algos over here on the screen, you can see it's forecasting that we've got a little bit of a dip and we're going to probably consolidate here. Okay, I got filled, so excellent. So I ended up making some decent money on that trade. So, and it rejected right off of this high level. So that was perfect trade actually. Let's come over here You see it almost caught the high peak here on this trade. If you see my cursor on the right hand side. So that was a nice scalp there. Anyway, yeah, just but what we're looking at, let's take a look at, let's go through the spectrum here. Let's go over to a 5 minute. 5 minutes still projecting along this 10 period moving average that we're going to stay below. We spiked above it a little bit. We printed up 51. We're almost back to 50. We are 51 again. So not a lot here. You can see all of the angles of attack. Those of you who've been around the channel know, look at moving averages. And I don't use trend lines, but I use the moving averages. The reason why I use moving averages is because I don't draw them. Okay, I want the markets to generate their simple averages. They work fine. I don't like I don't use. I'm not that I like them or don't dislike them. I just don't use any exponential or any weighted type averages. I just use pure simple, and I don't care what it is that you use. By the way, we'll make this a quick training as long as you understand how they work. If you always use exponential or some kind of weighted average or whatever, VWAP, whatever you're doing, that's fine. You just have to understand how the market moves around there. I just happen to use simple averages, and I've used them for literally forever. We started trading off of these moving averages 1983, 84, and we've used the same averages for decades. And I argue with all traders, if you're trading, what you want to do is, you just want to be consistent in your approach, and you need to get enough experience. So as it turns out, that was a really, really good exit on that trade, because you can see now we're trading back down, back in this range again. We're starting to get the potential of a bottoming formation here on the 5. So if we go back, let's just stay in this mode for just a little bit here. Then we'll migrate over. We'll talk about what could happen in the next, what this means, and then we'll go into some stocks and some other stuff. Yeah, I'm just looking at some comments here real quick. So, question, Tony Silva, is this the real Tony Silva? As in CBO Tony Silva? If it is, send me an email at info@kindlereport.com. Yeah, so this is just Streamlabs OBS, Tony. And I do have a green screen here, so that's why I'm able to do that. Yeah, so we're coming back. We're retesting these lows here. So there's going to be, this could be a pretty big moment, actually. Let's take a look at a couple things, and we'll just, yeah, silver always looks cheap. Sorry. I wish it was. That would have been impressive. Nice to have you on the stream anyway. Yeah, I am taking a Saliba. Thank you. He's good friends with a friend of mine. I've never met him. We never crossed it somehow or another. So potential bottoming pattern here on the 5 minute. This is the what we call the WaveTech webs, and the webs are very interesting patterns. So we're starting to get a little rounding here on this 5 minute chart in the middle. Now this same stuff is available on TradingView, but I'm just using it here because I can fire and trade here. So am I a bear now? Not necessarily. I still think we're in, and we'll go through that in a minute. We'll do some analysis, and I'll just probably regurgitate what I said in the Substack last night. So I think we're in a very broad trading range. Yeah, that's a good call on before the market close. What time we got here? Yeah. So just remind me to we'll go through this because what I'll do. I've got some time. Is we'll just hang out. We've got like 320 folks here, so good showing. So what we'll do is we'll continue. I'm thinking I got another trade coming in here. Order filled. I just put on. I've got some bids underneath the markets here. Order filled. Order filled. Get another 20 lot on here, just trying to. This is a little risky. I'm just, hang on. I got to kill some of these orders. I got stuff hanging out there. So yeah, I've got 30 on right now. So I'm just, I am actually going to try to scale out of 10 at 49.25, 49.50. You already got one. Just like I said, I like to take and load up a little bit on the entry, scale in, and then scale out. One of my old mentors used to always say, here we go, we're starting to move pretty good. Awesome. So I am going to, yeah, very nice. So we're trying to get back up to that 51 level. Let's come back over to the hourly chart. And so this thing looks pretty good, folks. What time we got? Yeah, so coming into the close, it looks like there's going to be a bit of a rebound. I'm going to do something. I hate when I do this, but I'm putting I just put a break-even stop on this trade. Like I've had a monster day, but what I would like is to see if we can get a nice run. Here we are trading 52, so this is a nice little run going here. So this is good. I've still got 20 left. So I sold 10 out, took a partial profit, and now I got a break-even stop. I want to see if this thing can run because we're getting that rounded bottom here on this 5-minute chart. Back to the hourly, we're getting a little bit. We've got a green bar. Like I said, we could probably get up to like 57. I'm sorry, 57 potentially, and then we're going to have some resistance, and we're going to come into the close. So, like I said, I hate every time those of you who've been in the old live room, every time I put a break-even stop, I should have just taken profits every time. So it's kind of funny. So if I get stopped out at break-even, there it goes. They're going to do it. They're going to do it. I'm sorry. I just laugh because every time I put a break-even stop in, it's like what I should have done was sold out of position. We'll see if they let me stay in, but that's funny. That's really funny. Yeah, I hate the word Fed pivot. I don't know what that means. I think the Fed will probably lower rates, but it's not really a pivot. They're still in the same strategy they've been in. What somebody said, I told you. What'd you tell me? I don't see you on the line. Yeah, we'll see how this plays out. I don't know. Um, I'm going to go back to this chart here. We're starting to get a little rounded bottom. There's going to be a resistance over here at right at this high market grid. We're looking at 59.5, 60 is potential resistance. I am going to take out these offers. So I got lucky. I figured they would stop me out. I would, if I get stopped out, I would have bought them back in. So let's go. So I'm going for $5,000 on this trade here. So we're looking at 55.52. I'll take that and run, and then we'll get into talking about what's going on. Yeah, we'll go through some of this stuff. All right, I just took profits on that. I don't like how it's acting here. We should have been able to follow through. Probably another re-entry. So let's do this. That was fun doing a few trades. Oh, okay. All right. So let's. I'm just trying to look. Unfortunately, on my stream here, there's a heart right over the word. Yeah, September does have a bad reputation, that's for sure. Views on the yen, we can do that. Nvidia, so someone says has another 7% to fall. We'll try to establish some of these. Just looking at a little chat here. Bear with me. Okay, so let's go over and let me get my eyeball off of the distraction here. Yeah, so hourly chart still looks like from here we're going to recover, and it's forecasting multiple hours. So we'll close this chart up on the. We'll take a look here at the daily, but we should have a little upward bias. We're also going to have something else I mentioned earlier. We have a potential STX buy signal, which suggests that we go sideways. One of the things that I've been talking about, today's action has squeezed down the PPM2. So I'm kind of frustrated from the standpoint that I want, let me just, I'm trying to get rid of this screen here. Okay. Frustrated that my drawing tool is not coming up. So it's getting layered. Ah, there it is. Good deal. All right. So now I can draw and show you some things here. So there's a couple things here. What we're seeing is from, I talked about this in last night's Substack. We got a penetration through the second derivative. No sound. Testing. Yeah, it looks like it's fine. Okay. Okay, cool. Just want to make sure. Yeah, so we're seeing, I'm going to draw around a couple things here on the PPMs because what they're forecasting is that we're pretty much at an extreme. We're not likely to get in a big uptrend, downtrend here. I think this 21 period moving average, which is right here, is going to, that's right here, and that is the value over here. 5509 is going to be that extreme level. I think ultimately we just kind of get into a pattern and we stay within this range next few days. Let me dump all this stuff. Yeah, so we probably get in. I talk about this pattern all the time. You have a rising 21-day moving average and a declining 10-day moving average. We're not quite in trend mode on the 10-day average declining, so the angle of attack right now is 0.14. Still, you can rise to that and trade above it in the current configuration. And it looks like what we're getting here is a flat spot. I just drew an arrow on PPM. 1 is going to stabilize. PPM 2 still got expansion in it. So there's going to be, on this 21-day moving average, there's going to be a fairly strong characteristic for the market to want to hang around that average. And one of the things that is likely to happen here is that angle will hold it. So let's do this, and I'm hoping that everything comes back up like I have it right now. Let's close this out. Let's go over to a weekly chart and let's just kind of pull back a little bit and get a concept of what's going on. So the weekly chart, folks, it's like so easy. Everybody sits around all day long waiting for the air quote, the signal for the top and for things to roll over. Now we are starting to see some weakness show up here on the weekly, but we're still not in trend mode. I still believe, I'm going to blow this chart up so we can dissect it just a little bit here. What's interesting, I talked about this in Substack last night. There's 3 new Fibonacci targets that just came out just this week, which is for upward move 5877. And the other one is, let me just give you all of them, 61, 67, 63, 46. One of the things I said in the Substack last night is if we look at the PPMs, they're not confirming this new range. So what we're likely to see here is that the market is going to stabilize along these weekly moving averages. And right now those are extreme 54.20, 55.48 is right where we're trading around now. And then the ultimate extreme right now is 52.18. So this was the big dilemma that I've been talking about in Substack off and on. And by the way, if you haven't you should sign up for the Substack. It's kendallreport.substack.com. Last night's report had 4,400 words in it. I got a little long in the tooth, usually at the beginning of the week, but I put a lot of effort into that, and I still think some of the better micro analysis that I'm doing on a daily basis. But the patterns that we're seeing here, we're seeing a deteriorating pattern that is setting up. Now, the thing that keeps me bullish is what I talk about all the time, which is actually I'm just trying to see if I can find this real quick. Yeah, let me just add this in. So I'm just bringing up the database right now is 71.31% long on the weekly, and right now it's 73.73. So a couple things can happen here. As what is possible is that we get the database, so it basically gets overbought like anything, and we start to see finally a retraction and start to see a rotation. I've been talking about the database going back to a year ago, October, right? this is when we started to get traction. And then when we came into January, I said it looks like we got at least a move to July, maybe as far into October. So from a trending standpoint, that's exactly what's happened. Also, if you looked at my 2024 outlook, I was talking about back-to-back double-digit years. Maybe it all gets wiped out here. We've got crazy election ahead of us, and who knows what's going to come out of everything from that standpoint. And so the bottom line is I don't see the collapse. Although I just noticed something. I love on a daily basis based on today's action. This is very, very interesting. So I'm going to go full screen here so we can see this. We have three. This came out last night. I don't know how I missed this, but we have three Fibonacci targets to the downside. And those are $51.88, $50.34, and $48.01. Now, really, if anything happens, and I'm going to draw this in, if anything happens here, folks, is we're going to set up, and I talked about this number, I think it was last week on Substack, is you see these green dots, and this comes from the Fib projection tool. And what this is, when you see extended dots, for those of you that have the indicators, you see these extended dots, that's a pivot number. And that number is 50, let me try to get it 1 second here. It's 5392. 5392 is the number. And that is your major pivot number. If we take that out, then it's Katie bar the door. This thing's going to come apart. We're going to go back and do this. So let me see if I can draw this in here. This would be what my expectations so we would get this move up. Trying to get something to show up good here. So we're going to get this move up sideways. Remember the 8-day rally that we've all talked about, this little first move? Now we went into sideways consolidation, but now it's starting to look like it's potentially a distribution, which suggests that the market's going to come down and test this level here, which is that 53.92 level. Let me clean this up, see if we can draw in a couple of things here. So we get this, we potentially get this move down, and this key line here, 53.92, will be the number to watch. We will have support at the 21 period moving 55.08 is that number at the moment. It's rising slightly. And you can see down here, I'll draw this in so we all have our eyes in the same spot. You can see right here, we have several more days where the 21-day moving average is going to continue to rise into this pattern. So it's 52.08, and I'll get you a number. I have to take all this off. I'll get you a number on what it's rising per day. And what happens at this point is that we're going to find out which way we're going. And the forecast for the PPMs are flat to negative as we come into September. So based on two things, I'm going to tell you, based on our database, which covers over 15,000 symbols, that database being up above that 62% level, it's at 71% on intermediate. What that tells us is we're likely to really just stay in a range like here. You can see the algos where these little red dots are, they're being projected looking out in the future that the market's going to stabilize here. However, there's always a however, right? So let me can all these. However, what if this will be the key when we get down to this level. If we take this out, then what we're going to do is come and test this 200-day moving average, which will be a retest of the lows that we printed in August. And that's where the rubber will hit the road. But this 53.92 level is the only number, if you're a longer term player, that you need to pay attention. And at that point, you're going to see a lot of things change if that gets taken out. So let me clean this up and let's go through one more scenario. And we'll bring up the NASDAQ because it's got a bit weaker look. So this is always a question we get here. The algos right now, they're forecasted out in the future that everything is flat to declining. And more importantly, this 200, this very bottom indicator down here is the 200, the PPM 200, which tracks the 200. What it's saying is the 200 is losing momentum. It's starting to flatten out. I'm being dramatic to show you this is what it's saying is happening. So whenever that happens, then it starts to indicate that there is a potential trend change on a larger scale. So this is a daily chart. And what that does is tells us that maybe we're going to challenge that 200-day, and then we get a bounce. If you watch the way markets go around the 200, we basically did this perfect. I'll bring up the NASDAQ here in a minute, but we went through the 200 on the NASDAQ and then bounced. In this case, we came right down to it. And even in the Russell, we saw the same thing where after the rally up and the distribution top on the Russell, it came down. So let's see if we can clean this all up. So yeah, and so Stephanie's, I totally agree. This is what I'm saying. We're testing some moving averages. There's still angle of attack. There's still positive. Let's do one last thing. I'm pretty deep into this, so let's just keep these thoughts going. So this is somebody said that we need to cover what's likely for tomorrow. So we're down. We've been live for just about an hour, so we'll keep going for a while. I'll hang around as long as you folks want to hang out. So let's do this. Let's go to a monthly, and then we'll go over. I just want to take a quick look here. Yeah, so this brings in a little perspective. And let me bring up the PPMs here real quick. Yeah, you know what? I'm going to convert this chart over to SPX just because I can get the algos to work. Yeah, I'm glad I did this, folks, because this we still have this upward slope on the 10-month moving average. So if you're new around this channel, basically the way that I do multi-series or we look at daily, weekly, monthly, is the shortest period moving average on the monthly is equal to the longest period on the weekly. So let me explain this. Let me show you that real quick, because then I'll go through the analysis on this. Is the weekly 40 right now is 51.88. Now we go to the monthly, and we're going to look at the 10-month moving average. And that number is 52.44. So if you ask me what the extreme support, I'm going to go 52.44 to 51.88. That's the range where we have moving average potential. We have PPM1 is at right now 1.87. We're a long ways away from that number, but there's only about a 10% probability with this angle of attack for the market to go down and below that. If you look at last month, when we sold off, we hit that 10-period moving average and just bounced right off of it on a monthly basis. And so what's going to be interesting, we still have an expanding market grid. That's the orange line here. That is still expanding. which tells you that the trend is still expanding. What we'll get here is probably a pullback. We look at a monthly S1 55.61. We're pretty right at that level. S2 54.85. S3 53.68. That puts us down. 53.92 is that pivot number I just told you about. So an S3 monthly would suggest we would get to that level. And I think folks are going to get fairly nervous, and as we come into the election, we've got the Fed meeting, on the 17th, I think is the decision. So, we've got a bunch of stuff coming here, but overall this trend is still very solid. In fact, we're looking at the first derivative. Let me draw this in. I haven't done any long-term analysis like this on YouTube for a while. So we have a couple things. We have these little V tops forming, and then we've got these downtrends forecasted. Where I'm drawing the arrows, this is forecast. Doesn't mean this will update as we get real data. But what we're looking at right here is that the PPM1 is going to penetrate through that first derivative. What that means is that we're likely to test that value. So when that happens, that means in October, we're likely to probably test that value. We could do it this month. We could trade all the way down to the 10-month moving average, the 40-week moving average, which is down at that number I just talked about, 52.44, 51.88, but the weekly average is rising. So these are going to normalize over the next couple of weeks. You have to realize you get 4 increments coming in on the calculation of the weekly when you only have 1 increment of the monthly. So these trends on a monthly basis are pretty strong. You can see the fact that we bounced off of that low like we did. This is where that 8-day rally came from. My original expectation, if we go back to that 8-day rally, that we get 8 days, we get 5 down, and then if we were going to be, we would get at least 5 to 8 up. We got neither. We got 5 sideways. Now we're in about 8 days of consolidation. So I have not done Bitcoin. We'll do that next. Yeah, so some questions on these V's, this V top, and yeah, so what's interesting about these V's, if we were looking at this, let me just clear this up real quick here. I'm going to do my best to try to draw this. Yeah, so that V came on this bar here. So it was this V turned down when it came September, which we're second day in, right? Really, the first day of trading is forecasting for us to come down and test this level here. So this tells us that we're going to challenge that 53.92 level is, what's this number? Yeah. That could be challenged, and that will be at that point where we're going to be able to actually determine what this trend's going to be like. And I'm going to go full Monte here, so bear with me. So this is a monster trend that we've been in. So I'm just going to continue with this long term. And I promise you, what time is it getting to be? We got about 12 minutes. We'll go watch the close, and then we'll hang out. We'll do stocks, okay? And we'll do Bitcoin as well. Yeah, sorry to get into the long-winded, but this is important because these are major trends. We come back here and you go all the way back to the 2009. And this most likely is what, let's just draw it in. So I'm going to argue somewhere, I'm going to draw in some things here, and let's just go down this trail. I'm going to show you this. I'm going to draw them in manually, and then I'm going to show you a tool in the WaveTech indicators that will do this for us. And then we're going to talk about this formation I just drew, and I'm going to change color so you can see this. This formation right here is one of the what I call the bugle. This is always, if you read Edwards and McGee, they will tell you this is a bearish formation. And I'm telling you, this is the single most bullish formation that I've ever seen. When you get this, basically it's this ABCDE pattern, and then it forms into this formation. So then we get this. Let me go back to my, see if I can get things going again here. Bear with me, stay with me, folks. Don't leave. So then we get back to this pattern here. So then we get back to here. There's probably a little ABC in here. Now we got 1, 2. This is probably a 3, and then we get a 4, and I think there's one more high, and we're probably going to be at a major. This takes us, by the way, on a monthly basis. This is 2026 and beyond. But we could end up going through 2025 and 2026, at least midway, in a correction phase, okay? On a longer term basis. You can see what's being forecast on here from this standpoint. But this is going to be an entire sequence as we go through this. Let me just make this one more level. We're going to make it big and ugly. But this entire sequence has been, this is the breakdown of the entire sequence here. And we're really looking at a completion and then probably a correction. And right here is big arrows. That's mid 26. So we're probably going to put a peak in sometime in the next few months. And that's why, I think it's important for you to have some kind of cell discipline, some kind of discipline around one of my famous lines. Those of you, my institutional clients or people that are watching, I always say process over attitude and opinions. Attitudes and opinions keep you in when you should be out and out when you should be in. So you want to have some sort of process. And this is why I built the software I did. The WaveTech software is an old clunky legacy software. I'm on a Mac, so I can't run my, our desktop runs on PC only. But the bottom line is what we're looking at here is this is a big cycle that's finally completing. And everybody knows it. We've been talking about it. The problem is the timing of it has been very difficult. All right, let me just blow this out. So, yeah, so So let's just take so you can see the forecast. Now this is monthly closing forecast. Doesn't mean it's going to happen, but you can see the algos on. So what there is here is there's um, the algos are drawing in the projected what the moving averages are going to look like going in the future. They could change a bit depending on what we get, but the bottom line is that what we're looking at here is a forecast to a sideways to downward decline. And if I come up here with numbers here, that 40-month moving average is around 50.74. So what would that be? That would be about, somebody asked about a 10% correction. That would be about a 10% correction, but most likely it's going to happen very much, very more methodical than you expect. We've got a lot of upward. The angle of attack is very present here from this standpoint. So let's. So I wanted to show you something. I was drawing in all this. Let's put in the. I'm just going to put the pattern finder on. And it's not very thick. Let me make it. Yeah, I was trying to get this so you could see it. I'm going to have to clean this up. But anyway, the WaveTech pattern finder will draw all these patterns for you, so you don't have to be an Elliott Wave wizard. Let me just see if I can take off something so you can see them. Yeah, so they're not as, here you can see where it's drawing all the patterns. So it actually is capable. It's much better. You're probably seeing like a zigzag tool. There's a bunch of stuff out there that's that will draw. This is actually the algorithm that we developed this way back in 1993-ish, I think it was. And it basically marks all the high lows. It also, this same algo does cycles, and it also does fib projections. Like all of these dots that you see on the screen are Fibonacci projections that are being done from the patterns that are being recognized by this tool. So you've got fib targets, you've got the patterns drawn here, and it just doesn't number the ways, but you can see all the things that I was just talking about on when I drew in manually what they look like. This will draw them in a real-time mode. You can have a 5-minute chart on it, it will do it. So it's pretty amazing from that standpoint. So let's put this back up. All right. Did I already go past? Yeah, we're 2 minutes into the close. So let's go here. Let's put ES back on. And let's go all the way from a monthly chart to a 5-second chart. It's interesting. This was probably about the yeah. So this is actually just a 5-second chart, and I'll show you this this forecast here, and I've got the webs on here. I need to put one last thing back on. So we'll watch this into the close. So forecast is some selling coming in for the close here. Yeah, I see somebody talking about the bond market, and that has been quite concerning. We're starting to see some soft bonds. One of my favorite lines is we're one bad bond auction from disaster. And so so we're forecasting down. This is what I was saying. Looks like we're getting a little bit of selling coming in here. This is final minute, folks. This is closing bell. Yeah, if you read the Substack last night, I was forecasting stronger numbers. We'll do Bitcoin next. We'll do gold. Maybe I'll touch on the dollar. I'm not going to get into deep. I just really got deep on this stuff because this is what it's all about, is looking at what the S&P is likely to do and what the scenario is. So we got a lot of that covered today. So that's good stuff. What are we into this thing? Hour 16. So we'll probably go at least another half hour and I'll get focused. Oh, look at this. We got a bid coming in now. And you can see the dynamic nature of this 1 minute forecast. Let me go. So now we're getting forecast for a rise on here. We got all three averages kind of going up. This 5-second chart. So it's just going to give you a nice feel for the dynamics as we come into the close. And that is it. So that was the close right there, 43. So let's go back and yeah, I figured there'd be we got this dip here and another nice little trade to the upside here. But matter of fact, I'll show you this. This is what I was talking about. This is not on the 1 minute, but you get this rolling bottom, and then I got weird names for these formations. The whale belly, it looks like the bottom of a whale, all the ribs that are underneath there. These are classic bottoming patterns. I would have been all over trading this thing if we were live. But there's, but at least had a pretty good day here. Yeah, I don't know. Talking about USA's regulatory capture of Tether, I'm the wrong guy to ask. I can look at the technicals and all that. And yeah, so let's take a look at the close and then let's move on. Let's cover some of these other markets. Let's go to a daily, see if we got the STX buy signal, which I believe we did. We very much did. So look at this. We got almost down to that 21 period moving average. I'm telling you, folks, if I mention a number in Substack, it's going there the next day. So let's talk about one more thing. And even though we got this STX buy signal, this is going to be interesting. I do have the market flow on here, and there's still a live buy signal that came in on August 24th over here. That's still live. And we had a short coming in over here on July 24th. But what we're seeing here is this upward slope. This is exactly what I'm talking about. Declining forecast for a declining 10-day moving average, a rising 21. We should trade within those ranges. Right now, that's 56.19 and 55.09. So those are the parameters that you should be able to hold just because of the rising nature of that 21 period moving average. There'd probably be some buying, but we did get an outside bar today, which happened at a top. So this would mean if we close lower tomorrow and we make a new low from today, then we're probably going for another 2 or 3 days. I'll cover that on Substack tonight. So by the way, on Substack, I know I raised prices from $8 a month. It's now, if you go for annual, it's 12. It's 19, I think 1997 or something like that on a monthly basis. But you can do a 7-day trial and check it out. So make sure you do that. All right, let's get into let's do Bitcoin, and then we'll go into some stocks here. So here's a V bottom forming on Bitcoin. Um, Let me get something off of here real quick. So Bitcoin is being forecasted to come up and test this 40 period moving average. You can see all of the indicators on Bitcoin are starting to turn around. The forecast is one of those V bottoms, and there's on ppm 1, 2, and ppm 3 is being forecasted from that level. So that is looks to me that we're going to see a challenge of that 40 period moving average. It's more upside than downside. So this is one of the dilemmas that we always have to deal with Bitcoin. Is it a risk on, risk off asset, or is it an alternative? And it's funny because sometimes it's very much an alternative, and other times it's just like it's risk on, risk off. So it's interesting to go from there. I'm just reading a couple of them. Oh yeah. So okay, Stephanie, I see your comment there. Yeah, yeah. Uh, I'd be glad to do something with Raleigh. I actually, Hugh Hendry is an old friend of mine, and I know he knows. Maybe I could reach out to Hugh, and he could make a connection there for us. Anyway, yeah. So this is the thing I talked about, Stephanie. I talked about this in the Substack last night on Bitcoin. Is everybody thought that the ETFs were going to be this big boon for Bitcoin, and what it ended up to be is an arbitrage for the market makers and for the ETF folks, just to churn a whole lot of money for a lot of fees. And so the reason why we're seeing this churning, if I can bring up the weekly, this is actually the conversation that I had in the Substack last night on Bitcoin, is if we go back, the halving event was back over here, and we've just been locked 73, 50,000, 70,000 has been the range. And and there's a point here where you can see the forecast is suggesting that we're going to move up towards, I talked about this last night, 63,000. There's some new fib targets coming in at higher levels, suggesting a retest of the highs. But one of the things that you have to look at on this pattern, just forget what it is. It could be a stock, it could be anything, is that this pattern is starting to look like a distribution top. If that's the case, then you go to the 200, which would scare a lot of people. That would put us, that number is 38,800. Now, I'm not predicting that because it looks like we're going to hold the numbers, but the key numbers 57.5, and then again at that 49.5 low that we printed a few weeks ago. Those are the levels you got to watch. But it's hard to come up with a bullish flag out of this when you see this much work being done at a high level. It's most likely a distribution pattern, which suggests that there's probably some lower prices as we come in. There's actually fib targets on the downside right now: 51,600, 44, 500, and 40,232, and that puts us down to 40,000. We'll say 40,000 to 38,000 is the extreme. I actually don't think that's what's going to happen. I think we'll continue to climb right along this 40-week moving average, and we'll probably stay sideways. The red dots are forecasting multiple weeks sideways and with a bias to the upside. I think that's how it plays out. And like I said, it may end up just being one of those situations where we have the pattern that's unfolding ends up to be a distribution top, but it doesn't mean we can't run up back in that range again. There's been a ton of work done here, and it hasn't been pretty, and it's been trendless. And that, like I said, once you get to a certain phase, you have to ask that question. And I think one of the things of becoming a good trader is that you have to ask the right questions about what's going on and try to stay out of the emotions. I look at this, I have to ask, is this a distribution top? And the answer is it probably is, but it doesn't mean we can't go up higher first. Yeah, Tony, I don't know when you talk about Ray Dalio. I don't know. I used to love Ray before he went public, and now he's just, yeah, I'm not sure what's going on. Yeah, so let's do this. Let's go ahead. I'm just looking at some comments here. Yeah, and you're right about the trade between arbitrage between GBTC. There's others too. Listen, market making. I'm a former market maker, and if you're a specialist and you're running that ETF, man, they're churning some money in that thing. It's crazy. That thing is so lucrative. A number of those ETFs are so big that they have just churned up a whole lot of money. It's been amazing. Thanks, Stephanie. Yeah, it's that's an interesting comment that you have there. Appreciate the euros. Um, yeah, I'm just reading a couple of comments and I'll come back in. Yeah, Ray used to be a very cool guy. I have a friend that used to work for him, and yeah, just a switch there got a little too elitist. It's funny. Okay, so let's do this. What do I got up here? Weekly. We're going to touch on gold literally for just a second here. Gold is starting to look a little toppy here. I think ultimately we see gold back in the mid 2400s. It looks like sideways range consolidation. Been a great run. Going back last year, we had this was when I talk about distribution tops. This was more of a corrective top in the formation. If we went back and looked at Bitcoin, you can see it's a much different scenario. So let's. Yeah, 20. Yeah, that's interesting. Just looking here. Yeah, it should be interesting to see the database run, which I'll talk about in Substack. And okay, let's do NVIDIA finally. Those of you who hung out, we lost about 100 people, but that's okay. So NVIDIA is coming right into some support here, but I'm going to blow this up and draw this in a little bit. This is if you look at the red dots are here, it's being forecasted to come into this pattern. Now this is a weekly chart, so we're looking at 3 to 5 weeks, we could still see some downside here. We already printed the extreme on the downside, and uh, what you'll notice on the market grid from the standpoint of let me just expand this out just a little bit here. If you let me draw in what the pattern looks like here from this standpoint. Let's do. This is that declining 10. Right here is the declining 10, the rising 40. This is where markets are going to trade in here. Okay, they could come down into this extreme. This number is rising, but this is most likely what's going to happen. And then the formation that we get here out of this weekly chart. So let's do some guessing. So we have. So this looks very 1, 2, 3. So what we probably get is something like this pattern here. Ultimately, you get this wedge, whether you get above here or not. We could come a little bit deeper and then come into this pattern. Let me clean it up. Yeah, so we get, this would be a pattern where we get, maybe we just get a slight retracement here, and then we come back down. And at this level, and you get this little wedge, and then maybe you get maybe a rally from this level. You can see here, I'm just going to draw some arrows. This is the 40-week moving average. That is starting to roll. So let's take a look at something here, and let's break it down looking at the algos. They're suggesting, so we got a 1.9% range ppm 1. That's a negative 1.9. We've got we still have a positive, just trying to get these numbers, 0.88 on the ppm 2. ppm 3 is still positive. This has been a ridiculous rally, right? So what we're getting here is there's a bit of an upslope. We're breaking below that just a little bit. We're also trading at the market grid. 106.72 is the STX level, 108.94. So we printed below that, low 107.29 right now. So we have a little bit of downside. If you look at this market grid here, and this is just set, we don't typically go outside of this range very much. It's all of these charts, when I talk about the market grid, when you get beyond this market grid range, it happens only about, it's approximately 12% of the time. So 9 times out of 10, every bar will stay within that context, and that's on a closing basis. You'll see little spikes once in a while, and this is a highly volatile stock. And this is a weekly. But you're seeing here where we're coming down to the extreme, so we're probably close to an extreme on here. I would not be a seller. I would not be buying any puts down here, hoping doing a Jim Cramer trade, sell low and try to sell lower. Usually a Jim Cramer trade is buy high and sell higher. They usually don't work very good. So there is that angle of attack that's here on the 10-week. And so this most likely scenario is that we come in and trade into this range. So let's do Tesla. I'm just going to roll on some stocks here real quick. We'll keep this same kind of range out. Tesla's got a really, these are strange patterns when you get into this type of situation where we print down to here. That was the lows, 138. This is the weekly. We rallied all the way up. Probably, this is a bad sign that Tesla declined as deep as it did. Because what you'd want, let me draw this in. What you would want in a stock like this, if you're bullish on it, is this is perfect. You get this 1, 2, 3, and so just a Elliott principle. If you're expecting like a 5-wave move up, the one thing you cannot do is where I drew this line horizontal. You cannot cross the next decline. This decline cannot cross that line, which it did. So what that means then is that this is most likely an ugly mess that's going to do something like this. And it's just going to stay in this crud giant range. You could probably, I'm drawing some random arrows here, but this is probably where it's just going to stay in these ranges. There's going to be some great trades because the stock's got a lot of volatility. And what we do have here is this rising 21. We don't have, and then we've got the 200 above it. So I would go with the trading range just of what's being forecasted by the red dot forecast. That's it right there. I am going to do something fairly, let's do this. So if you've been diehard and you're still hanging around here, this red dot forecasting tool, I just want to show the inputs again. All it is the WTR forecast. You can take there's 4 of those. You can do any of those, and you can change the length of the SMA. So this is just projecting out a 1-day close basis, so a 1-day moving average, and then it's looking back. I changed the thickness so the squares are big, so they're easy to see. And then I did a coefficient, left it at 150. Future bars, I put it out 24. A lot of times I'll bring it to like 14 is plenty. And then continue bars in increments of 3. It's grabbing groups of 3s to do the look back on the coefficient and then forecast it out like that. So this is, you can see that zigzag formation is where it's forecasting out. We could come as low as this 21-week moving average. That number is around 2, looks like 198. We could come down into there, but we should get that type of formation there. Okay. Yeah, so it doesn't necessarily, somebody, I think they're commenting on the STX buy. It doesn't mean it's going to be necessarily a positive day tomorrow, but I think we're going to see some retracement from today's range. I think things get really, this goes to the scenario that I was talking about as far as the stampede type market, and where you just get these stamps. So GE, is that still a company? Joking. So what is lots of GEs? Looks like it's following the line. The algos are suggesting more sideways though. Slight upward bias, probably come back into the range here a little bit. Hopefully I have the right symbol there. There's lots of GEs. Yeah. Oh, GEV. Okay. Oh, I see. It's fairly new stock then. Not enough data. NA. Yeah, markets were fairly orderly. Um, Silver, why not? Yeah, the weekly chart, we'll stick with the intermediate, probably coming back towards this 40-week moving average, 2864. I talked about gold. Probably the metals are going to see a bit of a pullback here. Um, yeah, I'm here to listen to a rant. Yeah, I think I just kind of did long-term analysis. Yeah. Let's do Apple. Got to look at Apple. It came down into weekly extreme as well. Forecasting is lower. My guess is we're probably coming back to this 21-day moving average. I'll draw this in just super quick. This is probably going to be your resistance zone here. Right here along this 10. And then you got the rising 40, probably trade into this range. And then you have the second wedge formation. And this is what the, let me clear this out a little bit. This is probably the bigger formation that's likely to happen. And you can see the algos are, this is what the algos are projecting, which would make sense. The market grid will start to maybe trend lower as well. So it'll be interesting to see how this, but this would look like, and you can see all of the algos are projecting a flatness and a loss of momentum there. Yeah, so one of the things, let's see here, USD pair listings, just looking here. Yeah, so Stephanie, so literally had an not an inside house invasion, but I actually had a non-American citizen actually approach my wife in our backyard, and we live on some open space, and it scared the bejesus out of her. So now it's like it's like a military base around here with cameras and ways to take care of herself. Yeah, who is we? Good question. Bad dialogue. Yeah, I did Bitcoin a few minutes ago. J&J, man. So weekly chart, J&J kind of coming up. Looks like we're getting close to a peak here. If I had to suggest, we're probably going to hover right around this 200-week moving average. Probably start to trade on either side. We've got a great rising angle of attack here. It's 1.3. which is a big number, but it looks like that carries us through into the end of September. We got a positive slope on the upside, but we're getting a little frothy, maybe from a market grid standpoint. 168, 170 is certainly getting right up in the top end of the range, at least for this week. So this is a weekly reversal on the Dow last week. I haven't covered the Dow for a while, but once again, we got monster downtrend here. But these patterns, folks, are great from a trading standpoint. But let's draw this in again. So we got a couple of these wedges flowing here. This is the 21, here's the 10, and then they got the 200. So this wedge right here, I'll just draw this area right here. We should trade within that range. Probably see, you know, just what is being forecasted. This is probably the range. This upward slope should hold it. And then, of course, if you break above this 10 down the road, then you come up to this level here on the Dow, and I'll get numbers here in a second. But yeah, you can see the algos are suggesting on PPM1 that this is going to flatten out. So this is also flattening. So we'll end up at the 21 period moving average. So let me get to the numbers here. So yeah, so that's right now that 21's coming down. We're probably looking at the crossover point of the 21 and the 40 is 103, but we're probably looking at least here the 101.50, and then the next level would be probably around 102.5, maybe 103 is an extreme. Yeah, I would definitely beat Peter on that one. All right, let's just want to do something here real quick. Last night's newsletter. All right. I got so many layers on this thing. All right, I'm not going to find it. Let's do this. Yeah, so let's see where we are. Still got 230 folks hanging out. Yeah, Richard Werner, I'd love to meet that guy. Yeah, let's bring up something here. So here's NVIDIA on, we actually sold out a while ago, and now it's starting, did not buy into this decline, but actually sold out here. Let me just bring this up. Yeah, last sell 121, and that was so it's been out of this. Let me see if I'm in the right account. IWM hack. This has been, I keep telling. Let me get off screen because I'm writing away here. So I keep telling, this is the WaveTech software. I took and brought up 12 stocks, and these are the 12 stocks that are in here. And they came out of the IWM. I did what I call an ETF hack, and I brought 12 stocks in, and currently the open positions are, this is what's being held. It's one stock underwater, everything else is done quite well. We look at the performance here. The average holding is average long 101, average long 220 days on these stocks. So we're looking at a reasonable amount of holding period. You can see this is the equity curve here. This is the equity curve. And so everybody tells you that the FANGs are the best way to be. Here's the return. Look at the returns in the last 3 years, 21, 24, 26, 22, 16, 24. That was a terrible year. These are the 12 stocks out of IWM that I did a hack. Last year, 50.41. This year, 47.55. We currently have 89% of the money invested right now. And this was a simple hack that was done just looking at the performance of things. So I'm going to do some videos on this stuff so that we can ultimately start to. I need you folks to, those of you that are serious in managing money, especially if you're doing 401ks and things like that. We probably have at least to do some training. We're going to kick back and do some training. Cigarettes are good, huh? This thing's up. So it's interesting. We got a V top coming here. So be careful. Looks like this thing wants to tip over. Probably at least back to the 21. We're looking at 50 and change. Yeah, Stephanie, you stole my hypothesis of my 2024 outlook and beyond. So 25, 26, I think AI is going to be absolutely amazing, what we're going to see from there. And you're already seeing the potential, I think, decay of some of the ChatGPT hype. The people they're putting on the board are toxic, to say the least. But I find, there's a lot of other stuff out there. Claude is very good at doing certain things. It's very good. I think better than chat. But I think overall the productivity will soar, and I think we can grow our way out of this debt. I really do. Question is whether we have, in the U.S., whether we have communism or whether we have a capitalist system going forward. That's what's up for grabs in this particular election coming up, my opinion. Yeah, I've got to do some training. We've kind of we've given a lot of folks the software, but what you've got is not a lot of support. And we used to support quite well back in the back in the day. Yeah, yeah. I think does it mean a lot of layoffs? Maybe. I still think there's a rotation of where bodies are going to go, and I still think even though AI is going to be fairly strong when it comes to like customer service, chat bots, and those kind of things, it's likely that it's going to eliminate a lot of those jobs. And most of those jobs are in Pakistan and India. Um, So from that standpoint, but I think that the scenario. Let's do this. We'll get to the end of today's stream. Really appreciate it. We had a great crowd today, one of the better crowds we've had. So nothing like a good market sell off to bring the folks out. So where was I at? Yeah. So I don't think there's going to be necessarily mass layoffs. I still think we talk about this all the time around here as having a man in the middle. There's still somebody has to have. It's sort of like the Wizard in Oz, right? You still got to have, even though the wizard looks pretty cool, you still got to have the guy behind the scenes still kind of directing things to a certain degree, and I think that will be the case. Um, Yeah, and I'm just looking at what Stephanie's saying is that UAE, I was in Dubai just not that long ago, and there's a lot of good stuff. I'm actually um, looking at some opportunities there. There's a lot going on uh, over there, especially in the financial markets. And Abu Dhabi is probably one of the hot spots because they're feeling left out because Dubai stole all the they stole all the sizzle over there. So they're looking. I've seen some really interesting deals coming out of there, and yeah, it's just yeah. So somebody's asking buy the dip. I think what you can play for short term. I think we're still in a sideways range. Today was overdone. I think at best it was another stampede where the markets literally went to an extreme. And typically, when they go to an extreme, we get a little bounce back. You can look back. I don't have the chart up right now, but you can look at some of these movements that happen. And once you get to these STX levels, especially if you get to them as far as the weekly charts, which we're doing, those are usually typically extremes in the markets. We could print through that, so be careful of trying to stab at a buy. But I would look for a number of things. We looked at the hourly chart when I was going through the deep analysis on the S&P, and that basically got us is forecasting the next several hours for a recovery. We'll see how the reopen happens at 3 p.m. my time, 5 Chicago, and 6 o'clock. We'll see how that all comes in. And so this is good because I was going to do a live stream. Just for the record, I'm going to attempt to do more live streams. I'm actually not in my studio right now, and I'm at a different location. So I'm going to have to potentially do some live streams as we go forward here in the next several days. So I'm going to try to stay on top of this thing. And then I'll still do the Substack. I'll write Substack tonight and all that stuff. So let's see in closing anybody has. Yeah, I think they just UAE just added some taxes in there. It's not as clean as it was. They get pressured by the imperialistic U.S. government, especially IRS has their fingers in virtually every country. I can tell you, I've done some things offshore, and it's just crazy. Just because you do things offshore, they think you're a crook. So, but let's see here if there's anything else here. Yeah, this was a good stream today, folks. Thanks for showing up. I really appreciate it. Yeah, 9% exactly. They just added that corp tax in. That's a shame they did that because it was, but I get it. Yes, I will, Tony. I will definitely comment on that. Yeah, yeah, self-directed Roth is way to go. That's what I've got. Absolutely. That's something interesting that you bring that up. And one of the things that I want to do, I was just talking. We have a whole network. It's not as big as it was once because I kind of stepped back from the primary business probably about 10 years ago. But we still have a fair amount of folks on the institutional level. And I have somebody that we have been talking about. There's a couple things with not just with the Roths, but there's a number of large 401ks out there that are just floundering in the wind and have no guidance. And that is a really good place to do uh, to run money. There's some restrictions what you could do, but it's. Uh, I think that is something I'm working on. I've been working on a project to rebuild our platform as well, and everything is frustrating sometimes. Everything takes longer than you think. But anyway, really appreciate everybody coming today. Still get a couple hundred here. It was great. I think we had probably 400 plus at one stage. That's good. That's good. I like it when it's you know back in the old 2020 when nobody had in. We were all locked in our homes. We used to get like a 1,000, 1,200. But anyway, thanks again. We'll call it quits here. Get the Substack, kendallreport.substack.com. You can also go to kendallreport.com/newsletter and get to the same place. Yeah, that's funny. Um, that's funny. I've noticed that an update within 3 hours after market open. Yeah, I'm just reading comments here. Now, listen, folks, I appreciate it. I'm actually, I've got I've got some things in life have gotten a bit better. I've been challenged. My wife's been very sick, so um, some things have stabilized. So it's given me a little bit more time. So anyway, folks, thanks again for watching. Hit that subscribe button. Hit the like button. I better have 1,000 likes on this video. So make sure you do that. Of course, no one's at the end will ever hear those words. But anyway, I appreciate everybody's hanging out. I have not done Substack in video format. One of the things we've been talking about, just say a quick comment. Um, yeah, I don't know. I can't look out 50 years anymore, Stephanie. I'd be 120 years old. Just trying to figure out how to get through this year. Um, but anyway, uh, just make sure you guys subscribe. I'm gonna be showing up a little bit more. And so subscribe. If you haven't got the indicators, get them, kendallreport.com/indicators. And they're magical on some of this stuff. I hope you saw some of that with us doing the analysis today. So anyway, folks, have a great one. We'll talk to you real soon.